Okay, let's talk about an ETF that has been making some serious waves, mostly because of its absolutely massive advertised yield. It's called MSTY, and the whole idea is that it can take market chaos and somehow turn it into a big, fat paycheck.
And when I say massive, I am not kidding. Look at this number. Yeah, you're seeing that right. Around 198%. That's the advertised annual yield for MSTY. A number like that is, well, it's pretty hard to ignore, isn't it?
Right? So you see a number like that, and two questions should immediately pop into your head. Number one, how in the world is that even possible? And number two, probably the most important one, what's the catch? Because there's always a catch, and that's exactly what we're going to break down right now.
To really get what's going on, we have to pop the hood and look at the engine that's powering this thing. It's a strategy that sounds complicated, it's called a synthetic covered call, but it's a pretty fascinating piece of financial machinery when you get down to it.
Okay, so here's the most important thing you need to understand right away. MSTR isn't getting its money from traditional stock dividends, not at all. Its income comes from selling options, and it's all focused on one single, incredibly volatile stock, MicroStrategy, ticker MSTR. It's famous because it holds a ton of Bitcoin, which makes its stock price swing all over the place.
So what on earth is a synthetic covered call? Let's try an analogy. Imagine you own a really fast racehorse, and that horse is MicroStrategy stock. You could race it yourself and hope to win a giant prize, or you could rent it out to someone else for the next race. They pay you a nice chunk of cash right now up front. But if your horse wins that big race, they get the jackpot, not you. That's pretty much what MSTY is doing.
And here's how that renting machine works, broken down into 3 simple steps. First, you find a really jumpy, volatile stock like MicroStrategy, because the wilder the ride, the more rent you can charge. Second, you sell those call options, that's the renting part, and you collect all that cash, which is called a premium. And then step 3, you take all that cash you just collected and hand it out to your investors as a huge monthly payout.
But, collecting all that rent money comes at a cost. Like they always say, there's no such thing as a free lunch, especially in the world of investing. So let's talk about the trade-offs here. What are you giving up?
And here it is, the big compromise, laid out plain and simple. Your potential for big gains, your upside, is capped. If MicroStrategy stock goes to the moon, you miss out on most of that epic ride. But, and this is a huge but, your downside is not protected. If the stock collapses, you're going right down with it. It's all of the risk for only a little bit of the reward.
Now this brings us to a risk that is just, well, it's almost unheard of for an ETF. It's called single issuer risk. I mean, the whole reason most people buy ETFs is for diversification, right? To spread their money across hundreds of companies. MSTYT does the exact opposite. Everything, the whole shebang, is tied to the fate of just one company.
And if you actually peek inside the fund to see what it holds, you're not going to see a nice basket of different stocks. Nope. You see a big pile of collateral, like U.S. Treasury bills, and a whole bunch of complex option contracts that all revolve around MicroStrategy. This is definitely not your grandpa's diversified mutual fund.
Which leads us to maybe the most critical question of all. Is that eye-popping yield actual profit, or is the fund just giving you your own money back and calling it income? There's a term for this, and it's called return of capital. It's a sneaky one. It means that a part of that giant check you're getting could just be a refund of your original investment. And when that happens, it's not a gain. It's actually eating away at the value of your investment over time. Think of it like this. You're getting paid by taking a few bricks from the foundation of your own house. Yeah, you're getting cash in your pocket, but the house itself is becoming less and less valuable.
And the fine print doesn't stop there. That huge income stream, it only exists as long as MicroStrategy stays super volatile. If the stock ever calms down, that yield is gonna shrink fast. We already know it's all tied to one company, which itself is tied to Bitcoin. And come on, let's be real, this is a complex strategy. On top of all that, you're paying a pretty steep fee for the privilege, almost 1% a year.
So, after hearing all that, you have to ask, who is an investment like this actually for? And honestly, the best way to think about MTST isn't as good or bad. It's more like a highly specialized power tool. It's designed for a very, very specific job. So this tool might be for you if you care way more about getting maximum cash in your pocket right now than you do about long-term growth.
It's for someone with a stomach of steel, a super high tolerance for risk, who's okay with potentially losing it all. You really need to understand how options work. And even then, this should probably only live in a tiny, speculative corner of your portfolio.
On the flip side, you should probably run for the hills if you're trying to grow your money over time, or if you absolutely cannot afford to lose what you put in. If you like things simple, diversified, and cheap, this is not for you. And most importantly, if you see that giant yield and think it means it's safe, well, that's a really dangerous mistake to make.
So let's wrap this up. That unbelievable 198% yield, it's not a lie. The fund really does generate it. But it's so important to understand that it is not a simple income stream, and it's definitely not a magic money machine. That number is a flashing neon sign for extreme risk. It's the price you get paid for betting on massive volatility, capping your own gains, and putting all of your eggs into one very shaky basket.
In the end, it really all boils down to one of the oldest and truest sayings in all of finance. High yield often signals high risk. That's the real story behind MSYT, and it's a powerful lesson for any investment out there that looks just a little too good to be true.